Welcome back to Alpha Recap, your daily wrap of markets and the sectors that moved them. The market day we're unpacking closed just a short while ago, and there was a lot to chew on. Rates moved, big project headlines hit, and policy kept playing spoiler or catalyst, depending on the sector. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Thanks for having me.
Let's jump in. Big macro thread. Treasury yields pushed up toward 5%, and that set the tone. Walk me through the immediate market reaction.
Sure. The climb toward 5% was the connective tissue across a lot of the day. Higher yields tightened conditions for rate-sensitive sectors. Think long-duration tech and some fintech plays, while boosting the case for names with nearer-term cash flows, like certain utilities and materials. It made investors reprice growth expectations, and that was visible in how the market rotated.
So, what really stands out here is how quickly the narrative flipped from growth everywhere to show me cash flow.
Exactly. I mean, when you step back and look at this, higher real yields compress valuations on long-dated cash flows. That's a math problem. Discount rates go up, and future earnings are worth less today.
Okay, on the positive side, there were some clear winners today. Technology, materials, and utilities got headlines. Tell us why tech and chip names held up.
A few industry-level stories helped. ARM debuted an in-house central processing unit, which is a big narrative play around AI compute. On top of that, there were fresh venture capital and corporate VC flows into semiconductor-related firms and reports of investment in extreme ultraviolet lithography tools, so the investment cycle for compute looks like it's entering a CapEx phase. Those are the kinds of concrete confirmations that analysts say can offset some of the rate pressure, at least for a bit.
And Revolut put out an update, right?
Right. Revolut reported revenue growth of about 46% for next year's outlook, which reinforced the fintech growth story inside tech coverage. Growth narratives like that, fast top-line momentum, are still getting attention even as financing costs rise.
Materials also showed strength. Lithium, cobalt, HPAL projects in Indonesia. What was the market takeaway?
Supplies in Chile and Australia expanded, and the high-pressure acid leaching project in Indonesia showed progress. Those supply updates eased some medium-term tightness for battery metals. The practical effect was ETF inflows and a renewed investor interest in materials tied to batteries. But, honestly, I was a bit surprised by this one.
Yeah, that tracks.
Recycling initiatives were also a headline, which matters because recycled supply can cap price spikes if it scales. So market participants are parsing not just mines coming online, but recycling economics and throughput.
Utilities had a big day too. Google signed solar power purchase agreements, and Erevan broke ground on a massive storage project. Tell listeners why that matters.
Those deals move utilities from pilot scale to commercial scale. Erevan's project was a 250 megawatt, 1,000 megawatt-hour storage facility, big format. Corporate procurement by a company like Google shows demand from major buyers. This changes dispatch economics for renewables, reduces curtailment, and makes the developer business model more bankable. That's real-world scale, not just policy promises. The number that really caught our eye on M&A, Danone agreed to buy Huel for about $1.2 billion. That signals large consumer companies are chasing direct-to-consumer, higher-margin nutrition plays.
Hold on, say that again?
Danone's deal was about $1.2 billion for Huel. Strategically, it suggests big consumer staples firms are pivoting towards subscriptionable, higher-growth niches.
Big move in a crowded space.
Right. And the other thing is that deal activity can be an early indicator of where margin expansion is expected to come from in consumer staples.
Okay. Let's shift to the parts of the market that underperformed. Finance and banking struggled today.
Yeah, banks and finance names were pressured by the yield move toward 5%, which tightened credit markets and strained rate-sensitive software and fintech exposures. Add in governance fights and regulatory scrutiny at some names, and the sector looked like it was under a lot of short-term stress.
Crypto was a mixed bag as well.
Crypto showed both institutional progress and operational setbacks. There were custody product rollouts and tokenization pilots, plus work like NASDAQ and Talos addressing a roughly $35 billion collateral bottleneck. That's structural plumbing that matters for institutional adoption. But at the same time, protocol revenue weakness at Lido and the wind down at Balancer kept sentiment fragile.
Tell listeners what the NASDAQ and Talos work is trying to fix, in plain English.
Think of it this way. Traditional markets have certain settlement and collateral mechanisms that are efficient for big institutions. On the crypto side, collateral can be fragmented or stuck due to custody or settlement frictions. NASDAQ and Talos are trying to build bridges so that tokenized collateral can flow more like traditional collateral, which could unlock liquidity for institutional players. It's plumbing, but important plumbing.
Energy markets were volatile too. Libya, Iranian transit fees, and yet renewables kept advancing.
Right. Geopolitical risks pushed oil price risk higher, which increased volatility. But at the same time, renewables and storage projects continued to scale, showing that the energy transition is happening even as legacy energy remains subject to geopolitical shocks. That's the key point. Transition doesn't eliminate political risk. It changes how volatility impacts investment decisions, pushing people to think about storage and grid hardening.
Quick reactions, short ones. Right.
Yeah, that tracks.
Let's talk cross-sector themes. You laid out 5 in your note. Give us the Cliff's Notes version.
Sure. 1. Rates and rotation. Yields near 5% are forcing a shift toward nearer-term cash flows. 2. AI compute and industrial CapEx. Chip and tool investment is lifting equipment and materials demand. 3. Energy transition versus energy security. Storage and PPAs are scaling even as geopolitics keeps oil volatile. 4. Regulation and policy as volatility multipliers. Healthcare, cannabis, crypto, these policy moves can create headline re-ratings. 5. Tokenization and institutional crypto plumbing. Progress is happening, but it's incremental and mixed with operational setbacks.
And how should listeners think about actionables? We're not giving advice, just readings from the tape.
Analysts note several practical pointers. Monitor rates and real yields closely and stress test earnings for high multiple growth names. Tilt watch lists toward names with visible near-term cash flow, utilities with power purchase agreements, materials with binding offtake, industrials tied to near-term construction. Track AI and semiconductor CapEx announcements because they ripple through equipment and material suppliers. And watch legal and policy calendars, healthcare pricing rulings, cannabis ballot timelines, state and Delaware stablecoin frameworks, because clarity often unlocks capital while uncertainty creates volatility.
What about specific company or project level watch items?
Keep an eye on ARM's downstream customer uptake of its in-house processor, orders for extreme ultraviolet tools, Erevon's storage commissioning timeline, lithium and cobalt project throughput and grades, and whether Ford revisits its EV battery strategy after pulling back from that joint venture. Also watch custody adoption metrics in crypto and revenue trends at major protocols like Lido.
What are the main risks that could flip today's narrative?
A bigger move in Treasury yields would accelerate rotation away from long-duration growth. Rapid regulatory clarity, positive or negative, in healthcare, cannabis, or crypto would shift capital flows. A geopolitical escalation that disrupts oil flows could boost near-term energy prices, but also accelerate investment into domestic alternatives and storage. And finally, big delays or cost overruns on marquee projects, chip fabs, HPAL plants, large storage facilities, would put pressure on supplier chains.
Before we wrap, any surprises you want to highlight?
Honestly, I was a bit surprised by how much capital commitments and project milestones seem to outweigh the rate headwind in pockets today, particularly in materials and utilities. When you see a 1,000 megawatt-hour storage project break ground and a credible corporate buyer sign a PPA, that's a tangible revenue pathway that markets can price differently than abstract policy rhetoric.
Final quick takeaways for listeners. 3 key ones.
1. Rates near 5% are the day's macro anchor. They're driving rotation and repricing duration. 2. Secular themes like AI, compute, battery metals, and grid-scale storage remain intact, but execution and visible cash flows matter more than ever. 3. Policy and plumbing developments, from healthcare settlements to NASDAQ Talos's work on collateral and state crypto frameworks, will create episodic winners and losers, so stay tuned to the regulatory calendar.
Quick reminder, this is all informational. We're not recommending buys or sells. Analysts note these are market observations and jolt points.
Correct. This is market color and sector analysis, not personalized investment advice.
All right, thanks for walking through that really helpful context today.
My pleasure. Always good to map the headlines back to the economic logic.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you next market day.